Thank you for joining Wealth Plan TV again. Today we're looking at risk, and we're joined by Pina Sharoni, who is Head of Retail Distribution at AIA Australia. Hi Pina, how are you?
Good, how are you, Kerry?
I'm superb. Thank you for joining us again. Your response from your earlier sections have been superb. Your YouTube figures are magnificent.
Oh, excellent, excellent. Thank you for having me back again.
No, it's really lovely. Thank you and AIA for your support also.
No, pleasure, pleasure.
Okay, Pina, you've got vast knowledge in terms of insurance. Before we go into a little bit more in depth in terms of the products, can we just review what they are once again? Can you just tell us what life insurance, TPD, trauma and income protection are briefly?
Sure. So life insurance, actually when we use the word life insurance, we normally take into account a whole range of different types of insurance. But strictly speaking, life insurance is insurance that provides a payment upon the death of an individual. Then we have total and permanent disablement. Total and permanent disablement provides a lump sum payment in the event that the person becomes permanently and totally disabled. Then we have income protection. Income protection provides a lump sum payment again, but on a monthly basis, and that's to compensate for income that's lost when a person becomes ill. And then we have what we call crisis recovery, or some insurance companies call it trauma insurance. And that again provides a lump sum of insurance in the event of a major trauma. For example, becoming paraplegic or becoming blind or whatever, things like that, having a heart attack, cancer, those sorts of crises where at the end of the day you still survive, but you've suffered a major trauma.
Okay, that's lovely. Thank you for that brief overview. When you speak to people, often the view about insurance companies isn't good. There's a flood, and all you ever hear on the media is how many people haven't been paid. There's a catastrophe somewhere, and again the media focuses on the companies that don't pay claims, but most quality insurance companies only exist to pay claims.
That's absolutely true, and I must say it gets a little bit frustrating when you do see those sorts of media releases. At the end of the day, an insured, a person who purchases life insurance, and there's certain terms and policies that are around the payment of those lump sum amounts in the event of a flood or whatever it is. The client does receive those policy terms and conditions, and so those companies that aren't paying out a particular claim are perhaps not paying out because that particular request for claim doesn't satisfy the terms and conditions.
So really, Pina, what you're saying is that insurance companies pay out exactly what the contract of insurance stipulates they should.
Absolutely.
And if people are looking to save money on insurance, money saved on insurance comes always at a cost, and the cost is what's actually covered.
And and that could be exactly right. So really, when a person does buy insurance, they've got to look at not just the price and compare price, but they need to be able to compare apples with apples. They need to see what does that insurance policy actually cover them for, and compare that to another insurance policy that perhaps covers them for the exact same things, and then have a look at price. And it really is, looking at value for money as well. And I think that's where it's important to get the right advice around insurance and really go to the experts when it comes to insurance.
Exactly. The viewers know that this is a television show to allow them to create their own financial plans. And in terms of the Go Dare concept, I think viewers should be able to do it themselves. In terms of risk insurance, it costs them no more to seek advice generally.
That is so true, Kerry. It doesn't, the insurance premium is what it is. It doesn't cost them any more to seek that advice, which is ideal. And I would encourage the public who are looking at insurance options to seek advice, absolutely.
And it's a good time to remind people that the best question every week on the website will get them a free insurance analysis funded by your good selves, which is nice.
Which is excellent,
okay.
Which is excellent.
All right, now AIA, you pay claims. What sort of, how can you convince us that insurance companies are good responsible, reliable people?
We do pay claims, and we pay genuine claims just as other insurance companies do. But to just give you an idea of the amount of claims that we pay, in 2011 we paid over $445 million worth of claims. What that amounts to, just to bring it to light, is $1.7 million every working day. And that's quite a significant amount of money, and that's just AA Australia. There are a number of other insurance companies out there that are paying similar types of numbers.
And look, I wouldn't single AA Australia out as a superb payer against the other major providers of insurance in Australia. My experience of them is that they're all good. And
that's absolutely true. Yeah. I can sit here and talk about AA Australia and some of the nuances and some of the things that I think we're better at. But the insurance companies out there are really genuinely wanting to pay the genuine claims out.
Yeah. So Pina, let's make it a little bit more concrete. How would a life insurance claim be paid?
Yes. So a life insurance claim would be paid in two events, either upon the death of what we call the insured, which is the person that we're insuring in that policy, or it could be a terminal illness payment. So that is where we've been notified that the insured is terminally ill. In other words, they have a certain time before they do pass away, and hence we'll pay, in effect, an advance payment, which I think is an excellent benefit, because it allows the claimant, the insured, to take care of their affairs, their financial affairs, and really organise themselves, and particularly, perhaps for the breadwinner of the family who might be in that situation, he or she may want to make sure that things are in order.
Or even go to Disneyland.
Or even go to Disneyland, whatever those last wishes are.
Okay, the same question now, but for total and permanent disability. What sort of criteria need to be met to have a total and permanent disability claim paid?
So in order to pay a total and permanent disablement claim, you need to be, pretty much the name says it, you need to be totally and permanently disabled. So in other words, you're not going to recover from that disability, and hence it means that you most likely cannot return to work, or not return to your usual occupation, which the occupation that you've been trained or educated. So
there's two definitions here, aren't there?
That's right. That's right. You have some varying definitions there.
So absolutely. Can we talk briefly about the standard definition, which is any occupation for which you're qualified by education, training and experience, and how that interacts in a claim situation?
And that's your most common form of total and permanent disablement definition, and that's as you said, it's that any occupation. So in other words, it's the definition says that you can no longer return to work, and it's the work that you are currently doing that you've been educated or qualified for. Okay, so it means therefore though that you could potentially return to work and do something else.
Yes.
All right. So that's the main definition, and you see that definition in a lot of insurance policies where they're being held under superannuation plans, for example.
Because the SIS Act will only pay on that definition.
That's right, and the SIS Act is the superannuation legislation will only pay on that definition.
Yes. Pina, does it make any difference where you buy the insurance? So we've spoken about insurance inside and outside of super, and we've seen a difference in definition there, so that clearly has an impact.
Yes.
Whether we buy it with advice, whether we buy it on the internet directly, does it make a difference come claims time?
Look, it doesn't make a difference come claims time. The policy is what the policy is, the terms are what the terms are. So the insurance company will pay out based on the terms of the insurance policy. The only thing that I would say is that you may find that depending on the client's circumstances, it may be more ideal for them to seek advice. What we find is that consumers who seek advice tend to have higher levels of cover, and also tend to keep that level of cover for a longer period of time as well. So that tells me that that they've been convinced of the value of life insurance and most likely have a more appropriate level of cover that suits their circumstances, because someone has sat in front of them and talked about their financial circumstances, their family circumstances, what their needs, and hence perhaps what the correct levels of insurance cover should be in an insurance policy.
Okay, Ben, look, thank you very much for joining us again.
My pleasure. Thank you, Kerry.
You're welcome. Thank you for staying with us in this section. We'll see you after the break. We'll be speaking to an advisor about how risk insurance interacts with Fred and John, and Dale will be helping us with that. We'll see you after the break.